Well, hello again, everyone. Welcome back to the channel. So we have a brand new fund from an exciting new fund family to talk about. It's called the QQQI, the NEOS NASDAQ 100. And I had a few people mention this in my Discord today. Wanted to get a video out about it earlier, but only so many hours in the day. So this one is actually really exciting because the first thing that jumps out to me is that the expense ratio is lower than yield max. So let's go into it. I've done a quick little bit of research here for you all. First of all, we'll look at how it's performing on Yahoo Finance. And it's relatively brand new, so there's not a lot of information on it. But we opened at $49 or so, or I want to say $50. Actually, so we lost 70 cents today. So that means that we were at 49.84 or so. It's literally, oh no, I'm sorry, it's like a day old. So it opened at $50 yesterday, and it's dropped. It dropped like 16 cents yesterday, and then it dropped 70 cents today. So this is the NEOS NASDAQ 100 High Income ETF, QQQI, and I believe they also do the SPYI. And since this is so new, there's really not anything. There's really not any information on it. My favorite thing here, the fair value has an XX.XX. That's an awesome fair value, you have to admit, right? But anyway, it's just so new. There's not a lot here. So this is Yahoo. Now I'm going to go to another site that I pulled up here because I found some good info on another site. All right, so let's go over here. And for those of you on the live stream, feel free to comment away. So I'm thinking that, oh, look at me, goofy me. I'm going to share the same screen. It's not what I want to do. I want to go back here. We are going to go, let's try this again. Okay, here we go. We're going to go here, the QQQI. So what jumped out at me, the expense ratio is, come on, the expense ratio is 0.68. This is the NEOS fund family. Let's see what other ETFs they have. So they have the SPYI, they have the QQQI, they have the CSHI, which is a T-bill ETF, and they have BNDI. So we'll go ahead and just look at all four. NEOS is a relatively new fund family to me. I don't cover it too much. I have covered SPYI before, the S&P 500 High Income ETF. So as a frame of reference, we'll have that data to look at as far as what we might be able to expect for a dividend. So let's see here. We have a fact sheet, but not a fiction sheet. Sometimes I like the fiction sheet better. Just kidding. That doesn't exist for funds. So let's look at the fact sheet and hopefully extract some facts, which that's always a great thing to do, right? Okay, so QQQI fact sheet. We can expect high monthly income generation. QQQI aims to generate high monthly income. Let me expand this a little bit. Take up the full screen at least. There's the expense ratio. There's the QSIP number. There's the ISIN number. Are you all sold yet? Now that you know these. The Bloomberg ticker. It's just the overall ticker, not the Bloomberg ticker. Anyway, so let's see what we can extract here. Tax efficiency. QQQI utilizes of NDX index options classified as Section 1256 contracts. Well, they lost me there. 60% long-term, 40% short-term capital gains. Well, that's how options are taxed. And fund managers may seek to take advantage of tax loss harvesting opportunities. Interesting. I got to read this first part again. QQQI utilizes of, is that even correct grammar? Of NDX index options classified as Section 1256 contracts. Interesting. You know what? I need to brush up on this a little bit. Because I thought they were, this whole time I thought they were using Section 1255, but they're using Section 1256. So I was only off by one. That's a joke, of course. So I'm all excited. This is like brand new. Section 1256 contracts and straddles are named for the section of the Internal Revenue Code that explains how investments like futures and options must be reported and taxed. That's right. Under the code, section 1256, investments are assigned a fair market value at the end of the year. I think I knew that. Hopefully I beat any commenter that's going to say, oh, well, just so section 1256 is this, right? Anyway, now here's an example of your tax document. I know how much we all love talking about taxes. It's one of our favorite subjects. So I might just share this one. I'm on the Tasty Trade site. I'm trying to do some cutting edge research for you all here, add some value, of course. Let me see here. We'll get to comments in a bit. I'm just going to try to share this one here real quick from Tasty Trade. Oh, look here. Wow. There's a new investor. Welcome. Great comments, by the way. Denny Keaton has like perfect attendance today. You get the attendance award for the day. I think you've attended all my live streams today. And this is like the fourth one. Actually, no, we're into, believe it or not, it's actually been, I haven't done a live stream since last month. Can you guys believe that? It's been since last month. I feel like it's been forever, even though it was like 28 minutes ago. Because we're in a new month. We're in February, right? Clap. We made it. First month of the year, we made it. We got 11 more to go. One downtown, 1256 is 60% long-term tax, 40% short-term tax rate. No, that's the section of the IRS code, which I know you all knew that. I was just late to the party, but or maybe early because it's actually morning. No, that's how options are taxed. Option gains are taxed, and this is important because a lot of people probably don't know this till they get hit with their tax bill. Options are taxed 60% long-term, 40% short-term. So it's like, and I have the formula, I have a spreadsheet somewhere, probably on the desktop, which I need to get back to. See, look, we're talking about taxes, we lose people. Okay, so that's how options are taxed. So remember that one, take that one to the bank, because, the IRS wants their money. Okay. Got to pay for all this stuff that we don't get, right? That's what it seems like. I mean, I couldn't tell you what I get from my taxes other than a friggin' hassle. But anyway, okay. So how to report section 1256 products. Of course, we don't give tax advice on this channel. Some frequently asked questions, section 1256 contracts, futures, options on futures, and cash settled. How about that? Options on futures. That sounds risky. Section 1256 contracts include futures, options on futures, and cash settled index options such as SPX, NDX, Root. Does that mean ruthless? Because I feel like they're ruthless in their taxation of these products. And VIX. Unlike equity and equity options, parentheses, securities, section 1256 products are subject to special, don't we feel special, 60/40 tax treatment. To learn more, please click here. I don't know if I want to do that. Check your tax forms in the tax center. Cash settled index options. Oh, here's what I was looking for. This is an example tax statement here. And darn, it doesn't let us click to, darn it. I'm going to have to really look here. Regulated futures contracts and section 1256 options. I got to go look at my brokerage statements now. Profit or loss realized. Hold on. Let me try to zoom in on here. This thing is really annoying. I thought I could click this. This might actually be a separate video, Let me check something here. So we're talking about the new fund. We'll get back to that in a second here. I don't want this to become a tax video. How to report your gain loss from section 1256. Well, there has to be gains first, right? I mean, this fund's so new. You know what? Let's not focus on this for now because the fund's so new. We don't have any gains yet. We've only lost so far. It's only like tomorrow will be day 3 of trading. So hopefully, like they say, the third time's the charm. So day 3, we got to go for a gain, right? Okay, let's go back to the site here because I'm really excited. I'm like, got new material here. Okay, the fact sheet, which hopefully, since it's a fact sheet, it should contain no fiction, right? Okay, let's go back to the QQQI fact sheet. Okay, so we covered 1256 contracts. Potentially, keyword, lower volatility. The income generated by QQQI may provide outperformance in mildly bullish or bearish environments. Mildly bullish or bearish. Outperformance in mildly bullish or bearish. That sounds interesting. This could be a good addition to our portfolio in addition to Yield Max, Defiance, and Rec shares, right? Professional options management, leverage and deep expertise and research of NEOS combining decades of experience managing options-based ETFs. Now, that model portfolio I mentioned, which may not be such a model portfolio, I said Yield Max, Rec shares, Defiance, which the returns on those hopefully defy the odds, and then maybe NEOS products could be a potential. Now, that wouldn't be the reason I say it may not be a model portfolio. Those fund families I mentioned happen to be, I know, the best funds in the world, right? Not. They happen to be the funds that get the most views on YouTube. So who knows? I mean, we have the whole year to see how we do. But anyway, so you could call that the most viewed YouTube funds portfolio, right? Which luckily those types of funds for me, like I tell my audience, I keep those to only 10% max of the overall portfolio. I'm mainly an index guy, a real estate guy, and I have mutual funds, ETFs, and broad-based market indexes. So, but yeah, all these are certainly fun. I love covering them, and you all seem to like them too. Okay, underlying exposure is to the NASDAQ 100. Distribution frequency is going to be monthly, so that's cool. So by this time next month, we're gonna have a juicy dividend, hopefully. Okay, so that's page 1. Wow, it took us almost 12 minutes to get through page 1. Obviously, there's no data yet because this is brand new. Seeks full replication of the NASDAQ 100 index. This sounds really, really interesting. This material must be preceded or accompanied by a prospectus. Oh, yeah, this is just the fact sheet. It's like the light version. Portfolio management team. All right, so who's going to have these guys on first? Potential use case. QQQI may be considered as an alternative to existing core equity allocations to provide a tax-efficient monthly income stream while maintaining the opportunity for upside participation when market conditions warrant. How did I do on that reading? Did I sound like I know what I was talking about? That's my goal. If I don't know what I'm talking about, I at least try to sound like I know what I'm talking about. Key features: seeks high monthly income, tax-efficient option strategy, and ETF structure. Yeah, we'd like that, right? Potential upside equity participation. Sounds good to me. Alternative to existing core equity allocations. Okay, so again, as an alternative, that would go in the 10% bucket. To tax efficient monthly income stream, because I don't necessarily consider, so options typically, a good options gain, your blended average tax rate is going to be like, I feel like 20%. It's going to be slightly higher because it's 60% and 40% split, like we read. So your blended rate's going to be higher than just your typical long-term capital gain because it's short-term and long-term blended together, while maintaining the opportunity for upside participation when market conditions warrant. Interesting. And the fund manager's named Garrett Paolela. Are you all sold now? Not that I'm selling anything here, other than views. An investment in NEOS ETFs involve risk. Darn it, it involves risk. Well, I'm done now. I don't want anything to do with this crap. Oh well. Why didn't they tell me that sooner? That should have been on page 1. It involves risk. Darn it. Foresight Fund Services LLC, which is not affiliated with the advisor. Oh, look at this. We got a little bit of a glossary here. Hey, this is good for newbie investors. You all can read up on. There's some really good concepts here, actually. Tax loss harvesting, the timely selling of securities at a loss in order to offset the amount of capital gains tax due on the sale of other securities at a profit. Hopefully, some of you all with your Yield Max funds might have, dare I say, sold some of your positions to tax loss harvest, because some of us are going to get busted in dividend tax. That's not going to be too fun. Like if we're down 30% in Tesla and we're going to get busted in tax Because remember, they're not, I don't think they're qualified dividends. So it's like ordinary income. So any of you all ballers out there that also are making money on these dividends, you're going to get hit at your marginal tax rate. So that's no fun, right? Okay, I like the terms they have at the bottom here. I like the structure of this, actually. Call spread, here's another good one. A call spread is an option spread strategy that's created when equal number of call options are bought and sold simultaneously. We can go into these later. I can give examples of these trades. Covered call, there you go. This is a good document. I really like this. Okay, now let's see what other nuggets of wisdom we can extract here. I like this site a lot. Okay, I like it so much I'm going to try to share it again. Okay, we'll do some comments here real quick. I'm torn about buying into YMAX or not. I like the idea of diversity. You mean diversification, right? But I don't want all these underlyings like Disney. That's true. Yeah, Disney is not doing so hot. I don't know. I might just buy the YMAG, but a lot of people think that the YMAX will outperform the YMAG, and I feel like whatever the majority of people think is usually right. Not. That's a joke. Also, Jay said each time a new YM fund comes out, it will be added to YMAX. That makes sense because it's like a fund of all the funds. That makes sense. I'm worried it's going to be more and more underlyings that I don't like, and the ones I do become more and more depleted. Well, look at it this way. It's like investing in like the S&P. It's like a total market yield max fund. So, I mean, I like the idea of that diversification. The holding's going to look super close to SPYI minus the Berkshire and the JPM. Oh, well, we like those. Those are both good companies. For YMAX, no, he's talking about the QQQI. I forget who's the first one to tell me. I wanted to give you credit for the first one to tell me. Oops, I got the camera angle a little bit down here. I got a clean house. I don't want you all to see my junk behind me. Anyway, what time is it? All right, so let's go back to the site here. Okay, where did that go? Where'd that site go? Did I close it? Hold on a second. I want to go to, I don't want to look at that. All right, bear with me here. Let's see if I can go back to this. Hold on a second. I'm just gonna pull it up again. It is yeah, the NEOS investment site. Wow, 18 minutes already. Time flies when we're having fun. Okay. All right. Let's try to figure out the rest of this here. I feel like we're halfway there. Come on, come on, come on. Okay. So again, they have the other ones. I don't know if we'll have time to look at these, but I got more content to research here. We'll definitely look at SPYI. The other ones I don't know much about. So anything I don't know anything about is just by default is garbage. Of course, that's a joke. So we'll look at SPYI. Contact us, about us. You know what? Let's read this real quick while we're at it. We're here to help. Oh, how nice. We're here to help the marketplace tackle the challenges of today, marked by volatile equity markets and high inflation. Oh, at least they're honest. While also managing for the long term, our mission is to offer intelligent, data-driven solutions to diversify and enhance your investment portfolio. Next evolution option strategies. NEOS ETFs aim to deliver the next evolution of option strategies where seeking income is the outcome. Seeking income is the outcome. Nice sentence there. Built on decades of research and experience, NEOS ETFs aim to empower the investor with portfolio building blocks to provide high income, tax efficiency, and diversification through data-driven options-based ETFs. Wow, well, how could we go wrong with that? ETF, separately managed accounts, custom and sub-advised, guiding principles, high monthly income, tax-efficient portfolio management, Data-driven research. Well, I only want the research if it's truly data-driven. So let's see. About us, insights, ETF lineup overview. Oh, okay. We'll look at this one. I like the site. I like it. Okay. Seeking tax-efficient monthly income. Yeah, aren't we all? Ah, look here. Perfect. I got a one-stop deal here. SPYI distribution yield 12.16%. Total return 13.97. Now I like this one because, like I've been telling you all, I wouldn't mind having a lower dividend and a better principal appreciation. Now this 12.16%, I remember doing a video on this back in April or May, back before we had all these other darn dividend channels out there. And I said jokingly, I was like, oh, you know what? I think this is too low because we got spoiled with yield max. But 12.16, that's not terrible compared to like individual stock dividends. The T-bill one is 6%. So that's paying like what you would get in like a money market or a high CD. The aggregate bond one, 5.52. How about this? The S&P 500 index, the SPY, pays 1.62. So I like how they break this down. These are actually outperforming their indexes. Total returns are underperforming, except for these two. How about this? These two are outperforming, and they pay a higher dividend. The S&P one, though, underperformed. 1 year standard deviation is less, so lower deviation, lower like volatility and risk. The beta is even less risky. I like that. So that scorecard as a whole really scores a lot of points with me. I like those four things together. And then the expense ratio, well, for this one, is very low, 0.38, 0.58. So we're not getting our 0.99 like Papa J is charging us. Look at this. NEOS ETFs may offer a complement or alternative to existing core portfolio allocations. Scenario one, hypothetical core asset allocation, 35% fixed income, 55% equities, and 10% treasuries. So it looks like they're all allocated that way. There's the yield, the standard deviation. I like the site. I'm liking it. And there's some videos on both of them. So I wonder what other funds are due out for these. Schedule a meeting with us. Should I do it? First name the, second name, last name coach. I'll do this later. Obviously, that's not my real name. But anyway, okay, now let's go look at, because we saw the site here, but I want to go look at Yahoo again because I just love Yahoo so much. And I don't have my free access to Seeking Alpha yet. Once I have that for free, I'll definitely use it. I'm not going to pay for Seeking Alpha because I'm a cheap SOB. Or so I've been told. But anyway, so I stick to Yahoo for now. Let's see. All right, we'll do some more comments here real quick. Let's see. Charles Ollinger. There's literally only like 20 or so super liquid high IV stocks that all these ETFs are participating in. There's so much overlap, so it's pick your flavor of the month. Well, it's the same thing like when retirement funds, they buy in, or like pension funds, or like, you know, these big retirement funds, when they buy into like Apple stock, Google, or the Magnificent Seven, as they say, which hopefully they stay magnificent. But I feel like when these funds buy in, they're so big, they're like market movers, so they can push the price of these stocks up. So when you see a stable stock like Apple run up by so much every year, part of that is I feel like the market movers buying in because there's so much volume in these funds because of the retirement accounts and this and that. My theory. But yeah, good point. Just like a new investor said here. Pretty soon you're going to be an old investor. You're getting a lot of experience. Eventually, there will be a 0 DTE at the money straddle. So for those that don't know, 0 DTE, it's my dog's name. I'm just kidding. It actually means zero date to expiration. At the money straddle, managed strategy that pays out monthly. Oh, darn it. You're not supposed to give away the name or my dog's name. I look like a Larry. Well, some people know my name in the Discord, but I'll give you a hint. THB is my initials. So Mr. John here's close in the first name, close but no cigar. I don't know, we'll have to do a game or something. I'm writing a book. We haven't played this game in a while, but we'll just go with this for today. That can be my name for today. But tomorrow it'll be something different. It'll be whatever name I identify as. How about that? Because I can identify with just those 3 letters. I can identify with multiple names. Okay, let's see. It's yield same as SPYI, just like QYLD, XYLD. Oh, really? So that's what Jay would tell us. So you're a good foot soldier for Jay, because if he were on with us right now, that's the same thing he would say. He'd be like, oh, it's another QYLD. Which is funny, because I'm not down as much in the QYLD as I am in Tesla. So yeah, it'll yield the same as that. Well, yeah, I'm seeing like 12%. QYLD was around 14% at one time. Oh, I remember before Yield Max, when that was all the rage, that those what's that, Global X shares, those would get all the views, I feel like. I realize it's not the same as Global X before people start saying that. Right. Well, we got to have something new to gravitate to. The only 2 truly unique option strategy ETFs that pay monthly is SVOL and Trace. What about Quattro? That comes after Trace, right? I had to think for a second. Making the coach think here. But the online content creators can do with comparisons of spreadsheets galore. Oh my, it's Xmas. Well, I got some spreadsheets of my own. And a lot of you seem to like the spreadsheet analysis. Anyway, oh yeah, we addressed those. Yeah. I'll give you this. The T and the H are actually in the first name. You'll probably get it now. Yeah, you got it. Mike. Yeah, I've been told that before. Anyway, but by tomorrow I'll identify as a different name. So let's see here. Feppy. Someone said Feppy. You speak it well. Oh, you know what? You were listening to me. Was I speaking it in the Discord? Oh, that's a joke because I said Trace. I spoke it like a gringo, right? But I can speak it better. I can count to 5 in Spanish. Uno, dos, tres, cuatro, cinco. But I had to think about the number 4 for a second. I don't know why. It's been a long day. I've been trying to churn out these live streams to keep up with all the others out there, you know? But anyway, fun stuff. All right, so what were we doing? Oh, we're going to look at we're going to spy on the SPYI. Here we go. The jokes just get better. All right, let's look here. Okay, so we're going to look at SPYI. That's going to be, let's see. Oh, you know what? So none of you have tried to speculate yet on the potential dividend that the QQQI will pay out, which is surprising because that's usually the first thing you all try to do, even before the fund is even traded for like a minute. You all are already saying, what's the dividend going to be? Is it going to be massive? And honestly, I have no idea. But luckily, I happen to be in possession of advanced financial forecasting equipment, such as the 8-ball, which helps give me keen insights, not just into funds and financial analysis, but in life as well. Some of life's most puzzling questions, the advanced equipment helps me out on a lot. So, are we going to have a high dividend in the QQQI? We will ask now, and let's see what the highly advanced equipment says. It says, concentrate and ask again. Well, I thought I did. All right, I got to ask twice. Uh-oh. Don't count on it. Ooh. Well, this other one only pays 12%. So, I mean, that's not a massive dividend after all. I feel like, we need a chart for like YouTube videos for the funds that get the most views. There is a high correlation for those of you statisticians out there. There's a very high correlation between views and dividend yield. It's very high correlation. So we should have a chart that's like, it starts with 100%. So Tesla right now is at 77%. So the high dividend yield, the higher the dividend yield, the higher the views on YouTube. So I don't know. We may not be talking about these for long. I'm just kidding. I'll talk about them all. Anyway, all right, SPYI. Let's see. So this one's been around since 2022. Dang, so they waited a long time to launch this new one. Wonder why now. Actually, you know, this one hasn't done too bad. We're flat. If you basically bought at the inception, you're flat in this one. So we went up here, we went down, and then we've kind of been choppy. But overall, as we get closer to the pharmaceutical ad on the screen here, we went up over here in the summer, and then we came back down. This would have been a good buying point here. Oh, how cute, a heart-shaped pizza from Goldbelly. I haven't used them, but that's supposed to be a service where you can order food and have it shipped in from any state. I wish they did In-N-Out Burger. If they did, I would be In-N-Out ordering that. So there's the Halloween lows I talk about, 45.08. We've recovered from there. The yield here is only saying 9.46%, and the expense ratio is the same as for the QQQI. There's net assets, NAV, so it's right on par with the real NAV. That's good. Price to earnings ratio. Interesting. We have all of this. How are we doing? Let's see. For year to date, with the first month of the year already in the books, $49 we peaked at. We came back from 48.02. So I feel like this one would give us the best barometer as far as what we could expect from our newest one, the QQQI. Check out top holdings here. Apple, 7%. Microsoft, almost 7%. Amazon, NVIDIA, Alphabet, Meta. Oh, that's like the Magnificent Seven all over again. Just like, who was it? Mr. Ollinger here said. They're all like in the same shit, it seems like. I'm sorry, they're in the same magnificent stocks. Okay, so there's that. What else do we got here? What's my ethnic background? Oh, I'm a lot of stuff. I'm some kind of Spanish. They say people that are like native Floridians are all, you know, some kind of Spanish. Yeah. Anyway, okay. Let's see. I'm using FEPI SVOL for their synthetic theta, and positive delta with low NAV erosion ETFs, and using TLT weekly put calendars and out of the money call verticals to hedge downside direction. Well, sounds like you have it figured out. As a new investor, you have no idea how confusing that comment is to read. Actually, it's confusing to me too. I like how you say that because I just read through it, but it's confusing to me too. I'd have a better time trying to read Mandarin. Well, maybe you could talk to Khmer about that. I'm just kidding. That's anyway, bad joke. Sorry about that. Okay, look, I actually need to read this again. I'm using FEPI SVOL for their synthetic theta, and I don't even know what a synthetic theta is. Now, I know theta is the time decay in options. Okay, so synthetic theta would be, it's like similar to the synthetic positions that YieldMax has. Positive delta with low NAV erosion ETFs and using TLT weekly put calendars and out of the money call vertical. So it's pretty advanced options strategies to hedge downside direction. Well, that's good. I feel like we need to use as advanced stuff as we can on the YieldMax stuff. All right, let's see here. Let me wrap this up before I get myself into more trouble here. Monthly distribution as divvy payments in a covered call ETF is essentially synthetic theta. Oh, thank you for clarifying that. Okay. The monthly distribution is the dividend payments and a covered call ETF is essentially, yeah. Okay. That makes sense then. Thanks for simplifying that for us. And if you want to simplify volatility, you can invest in SVOL, of course. All right, you all, it's been real. It's been fun. Thank you all for tuning in. Like, comment, and subscribe, and spread the word, and join the Discord if you haven't already. And we will see you all sooner than you think. Take care. Have a good one.